The atmospherics are ripe for change at the Federal Reserve this week, but the central bank appears poised to engage in its own exquisite brand of foreplay rather than consummating the relationship the markets so desperately crave. Fed Chair Jerome Powell and his cohort on the Federal Open Market Committee seem likely to flirt shamelessly with the idea of lowering interest rates from their lofty peak, perhaps even going so far as to hint that the fabled first cut could arrive as soon as their next rendezvous in September. But if the legion of tea leaf readers on Wall Street has it right, the Delphic priests of monetary policy will once again leave their acolytes thirsty for clarity, refusing to offer concrete details on just how quickly the easing cycle might unspool. It has been a tantalizing dance, this game of will they or won't they between the Fed and its multiplicity of watchful admirers. On one side, the gathered economic monks have diligently recited the liturgies that would seem to presage lower rates moderating inflation, a creeping rise in unemployment, and that dogged insistence that policy will remain utterly data-dependent. And yet the objects of their desire have steadfastly rebuffed them at each of the last 10 meetings, clinging to the most restrictive policy stance in over 2 decades like lovebirds unwilling to be parted. But the magic may finally be returning this week, with most Fed whispers anticipating that the statement released on Wednesday afternoon will offer fresh enticements about September. The language, so often arid, could well become more flirtatious, perhaps acknowledging further progress on inflation or expressing growing confidence that price pressures are realigning with the sacred 2% target. For Powell, the modern-day oracle whose every riddle is parsed more feverishly than the scribbles of Nostradamus, it could represent a bellwether moment in his campaign of rhetorical seduction. I think they are going to change the language in the statement to suggest a cut at the September meeting, purred Subhadra Rajappa of Société Générale, one of the many prophets seeking to plumb the depths of the Fed's soul. She pointed to recent comments from the normally phlegmatic John Williams, he of the New York Fed, who let slip that dreaded R-word, restrictive. With its policymakers now openly acknowledging their stance may have become too harsh, too punishing, the way seems clear for liberalization. Not that it will come easily, mind you. The committee may be turning coy, but they are hardly accommodative libertines. Economists firmly expect the Fed to leave its benchmark overnight rate untouched at this week's meeting, marooned in the imprisoning 5.25 to 5.5% range where it has lingered for the past painful year. Despite the growing clamor from prominent Senate to just get on with it, yes, former Fed Vice Chair Alan Blinder, we see your raised hand. The custodians of monetary virtue seem disinclined to make any rash moves. Not yet. Not when there remains a chance that by simply dropping hints of easier policy to come, they might be able to prolong the delicious tension a while longer. For the Fed has always been a tease of Baroque talents, an institutionalized flirt that delights in stringing its observers along through cycles of hope and despair. Even as Powell may finally loosen his tongue enough to validate market expectations for a September cut, traders can be sure he will temper that indulgence with ritualistic reminders about data dependence and a meeting-by-meeting approach. This is not a central bank that gives it all away at once. Like all great foreplays, there must be the tantalizing suggestion of more to come while leaving the climax forever slightly out of reach. And oh, what a climax it could be! For while the smart money currently envisions just a quarter-point cut for next time, the Fed is not so crass as to ignore the prospects for greater generosity. Its courtiers speak openly of the chance that September's gift could be larger than the standard 25 basis point delight, an intriguing prospect that has the pleasure mavens on Wall Street flushed with arousal. They have even begun to let their imaginations run wild about further installments beyond that initial encounter, with current pricing in the futures markets implying at least 2 or 3 more cuts could follow before year-end. Not that Powell will validate such reveries, of course. The high priest knows that part of the exquisite torture is refusing to map out the road ahead, keeping his acolytes forever uncertain about where this journey is leading and how quickly they might get there. So he will retreat behind the comforting platitudes about unexpected weakening in labor markets or other incoming data before his gaze is forced to linger too lustily on the remainder of 2023. This week's event is simply the next tantalizing step in an age-old dance of obfuscation. Still, the signs of imminent climax are there for those willing to embrace them. The rise in unemployment from levels previously judged to be maximal employment. The hard-won progress on inflation after wrenching years of pain and sacrifice. Even the hints from the avowed of Austin Goolsbee, poised this week to cast his first potentially dissentious vote, that he yearns for fiercer action in the name of economic rapture. They are the cliched motions of a concupiscent lovemaking cycle that has been playing out at the Fed for as long as most can remember. So watch keenly when Powell takes the podium at 2:30 p.m. on Wednesday, shortly after the main statement is released. Brace for the expected feints and evasions, the furrowed brow warnings that even a September rate cut is no sure thing. This is the Fed's foremost artiste of monetary coitus interruptus. But then listen too for the suggestive hints that will follow, those telling inflections about greater confidence in economic healing, that studied ambiguity about what might constitute weakening enough to accelerate the easing. For while the Fed is not ready to go all the way just yet, those droplets of innuendo may be the sweetest intimations that the long-delayed ecstasy could finally be nearing its tremulous release. Lord knows, after years of foreplay, the audience has never been more primed for it.